Could we see the start of a short squeeze? That's what we're going to discuss in today's show. We're going to have a look at this and a whole lot more. So smash the like button. Let's get straight into the show content. The reason why I say that is because the stock market is sitting just under 3% away from creating new all-time highs, which is very, very, very close. And we've been consolidating into the SL flip region, which is exactly what we're looking at when this candle did come down over there. But most importantly, it's what's happening with the hedge funds, right? And the hedge funds now have the lowest level of Magnificent Seven exposure in the last 5 years, showing that they're offsides in terms of their positioning. And if there's so many hedge funds that are offsides over here, and this actually does start to create new all-time highs, where is their invalidation, meaning flipping from hedge short into actually positioning into a long trade? Well, you would have to imagine that their short stop losses are going to be situated somewhere over here, which means if this can start to grind up into all-time highs over there, you're going to start to get a pretty aggressive move into new all-time highs for the stock market. And it's actually pretty unbelievable when you do compress this and you have a look at the previous times that that's happened, right? You had this COVID period and it's actually looking very, very similar. Although what I will mention with COVID is you did have one more pullback over here. You can see that grind up just before all-time highs. You had one more big flush in terms of a percentage. What was that? 10% move, which is still pretty significant, right? So will we get something similar to that, or was that already the 10% flush? Well, in this instance, we got about a 4% flush. If we got a 10% flush from this region over here, you know, that could drop you as far down as about 5,400. So I definitely think that as we do grind closer and closer towards those all-time highs, a lot of these hedge funds will have to start to reposition, and that could create a bit of a short squeeze. The question is, will that lead into a short squeeze for Bitcoin, or is Bitcoin deviating the range highs and breaking down? There's definitely some key levels that we need to be looking at, which are still relevant with that downside risk, at least dropping down sub $100,000. That is still potentially on the table. But when you look at a report like this from Crowded Market Report, what you're seeing over here is essentially that large speculators, which are most often and most commonly incorrect in their analysis, these are speculators in terms of retail gamblers, they've been positioning short in the current move over here, whereas commercials, who are massive funds that tend to get the moves most correct, and market makers who are driving a lot of these moves over here, have been positioned on the long side. So in alignment with what we're seeing over here as the stock market grinds towards those highs with only 3% to go, will it push beyond that point and create that short squeeze? Well, if we look at Bitcoin as well in terms of the aggregate funding, for the first time in quite a while, we're starting to position on the negative side over there with the funding, right? What I want you to focus on is, where was price when you had the red negative funding on the hourly time frame? And ultimately, that was most of those high lows that started to form over here, right? So a lot of those high lows before getting expansion occurred when Bitcoin was forming some sort of a major base or bottom in anticipation of the next move up, and you've started to print the first bit over there. Now, that's not to say that you can't see something like this. Remember, that could still play out where you have further negative funding over there. We spoke about the same thing on ETH, whereby ETH would have to position down to about $2,300, and that could be your final flush before putting in a broader and bigger short squeeze in alignment with what we're probably going to see in the stock market over here, right? So in terms of levels to look at, I think it's important to look at the total cryptocurrency market cap, total 1, 2, 3. Remember, total 1 is everything. It's all the cryptos combined. Total 2 is everything minus Bitcoin. Total 3 is everything minus Bitcoin and ETH. And this is essentially what the picture looks like, right? I would label this as the bid zone for the total cryptocurrency market cap, which in order to hit this level over here, you probably need to see a bit of a deeper flush in Bitcoin, right? Now, you know, it's of course going to be a little bit of a guessing game whether you're actually going to sweep these lows over here or if you're going to go to the highs first. But what I would say is, if you do get that flush towards the downside, towards 3 trillion over here, and you take out all of these lows, maybe that comes out later this week. We have a couple of economic data points which are going to be coming out that could drive that move towards the downside. If you do get that, I do believe that's a strong bid zone with a tight stop loss underneath these lows over here on the total cryptocurrency market cap, right? So again, the question remains, do you do this, or do you first move straight towards the upside and ultimately those lows are going to be left behind? This is a discussion that I had yesterday with the Whale Room members live on the Zoom. And essentially what I was suggesting over here or looking at is that sometimes if you're about to go into parabolic advancement and things are going to get really, really aggressive, the TA suggests that you should do this, right? If you're following the textbook would suggest that you should be sweeping those lows. You should be going for the liquidity grab first. But the reality is, in these parabolic advancements within crypto, sometimes, things just start to expand, especially if the stock market does as well. Then you may not get the picture perfect textbook analysis over there, right? If you look at total 2, very, very similar. This would mean that you would want to get a sweep of all of these lows over here down into the fair value gap. So therefore, you're looking at anywhere between a low of about 1.04 trillion and just below those lows at about 1.12 trillion, right? So that's going to be a great zone to bid if you do get that one final flush. Don't panic, right? Don't panic. I think that's the messaging over here. If you do get that flush, don't panic. If you look at total 3 has already come clean into that zone, right? So we're seeing a bit of a divergence or difference between what's happening between Bitcoin and the altcoins, right? And I'll show you what that looks like on the Bitcoin dominance chart as well. If you look at the others chart, same thing, right? It's already come into the bid zone over the last couple of days, most recently. And now you're looking for this to position into a sign of strength, which would be a reclaim of 265 billion, which ultimately means if you can start to see the total cryptocurrency market cap recovering, of course, that all-important breakdown level, that is going to be significant, right? So we'll put that one in blue. If you can start to recover the breakdown level, 265, that's going to show that momentum is starting to shift, and that's probably going to correlate with a slight drop in the Bitcoin dominance chart, which we'll look at in a moment, right? So how do you get a drop in the Bitcoin dominance chart? One, either Bitcoin has to pull back a little bit while altcoins continue towards the upside, meaning Bitcoin can slowly draw down towards that just below $100,000 mark, or alternatively, Bitcoin needs to range exactly where it's at and maintain a sideways posturing, which will allow prices to go higher, right? In the broader perspective, though, if you have a look at this, and we'll go maybe onto the weekly time frame, you can see that measuring the total cryptocurrency market cap, total 3 for the altcoins against Bitcoin, well, it's been mostly obliterated, right? But it's coming very, very, very close to a key pivot level. So if you do see one more drop like that, that's probably going to be the final nail in the coffin before resurrection for the altcoins. So that will kill altcoins, make people capitulate, and then hopefully there'll be some repositioning. If you look at others measured against Bitcoin, well, you're already grinding through this level over here, which is the upsloping channel, which has led to all of the major altcoin seasons. And we said, based on how many times you've hit this, there was a good chance that you're going to breach through and possibly come all the way down, right? So a very, very interesting spot. I think you need to pay quite a lot of attention to what's going on in the markets. And if you think that you've missed the trending moves when it comes to any altcoins, of course you haven't, guys. The reality is that most altcoins are down significantly, not only in USD pair terms, but Bitcoin terms, especially barring a few coins, right? ETH has done well recently, and we spoke about ETH from 1,500. I made a specific video way before there was any hype, purely dedicated just to Ethereum, trying to highlight why ETH is an amazing buy around that $1,500 mark. I then highlighted again at 1,800. And I'm telling you once again, if we look at it like this and you do actually get any sort of a deeper pullback into the bid zone over here for total 2, which has a heavy weighting total 2 considering ETH, that would bring ETH down into about 2,200. That is going to be your next opportunity, which probably means total 2 down to about 1.08 trillion, somewhere into this mid-level over here on the daily time frame, right? So that is something that you do want to pay attention to. If you look at this in terms of a trending move, again, just supporting what I've just said, you've hardly had any sort of a trending move develop yet when it comes to total 2, 3 or others, and I'll show you why, right? Look at the posturing on the total cryptocurrency market cap. These are your strong trending moves, right? When price is above the 3, the 9, and the 30, and the angle towards the upside, you're long and strong, right? You get a couple of periods of chop and consolidation in between, and then you have continuation of that trend. When we look at total 2, well, look at the posturing over here, right? It's still just chopping about. It hasn't actually established any sort of a strong trend. If we look at total 3, it looks even worse, right? It's still chopping about. It hasn't actually established any strong trend yet. Others even worse, right? As you go down the risk curve, it looks worse and worse and worse, just supporting that there really hasn't been any real breakout trending moves when it comes to the altcoin sector. And if you want an even better viewpoint of what the altcoins have looked like against Bitcoin over this entire cycle, it shows we haven't had any real retail interest coming back, because this is what the trend looks like, right? Pretty brutal trend over there. It's literally just been nothing but straight down against Bitcoin, others against Bitcoin, straight down as well, aggressive downtrend. So basically, there's no rush, right? You don't need to lose all of your money trying to buy the next best altcoin and trying to pick low caps that are going to outperform. All you need to wait for is for a strong trend to reestablish, which means you probably have to range for a little bit first to get those moving averages to start to curl back towards the upside and roll over. And then you can get into a bullish trend and you can catch that next big move, right? So ultimately, I don't think that there's any major rush over here. Even if there is a short squeeze, capital preservation is still going to be very, very important because it's going to take a lot to reverse this trend against Bitcoin, right? So if we look at the total liquidations over here, still relatively low, where it's been a couple of days since we saw a big liquidation. The reason also I'm advocating that there is a possibility you'll see a short squeeze some point soon in the next couple of weeks is we haven't seen one for a very, very long period of time, right? Most of these squeezes recently have been long squeezes. So in alignment with the hedge funds being offsides, in alignment with the large speculators trying to short near all-time highs over there, and they may get a little bit of downside, but you need to be pretty savvy when it comes to short trading, right? You need to be able to get out of those positions quickly. We'll see if the daily exchange volume can roll over. For now, it's pretty neutral, which makes directional bias a little bit more difficult because this has given us a massive edge, right? For now, we have a high-low, we have a high, and we're chopping about to see if we can create yet another high-low over there, right? In terms of the market cycle overview, looking at Bitcoin's return on investment from cycle lows, well, this is where we're currently at, right? The reason why it's important to pay attention to whether we're possibly going to deviate, if this is a confirmed deviation and we're going to go lower, this is why it's important, right? Because if you look at the prior cycles and we just simply zoom into that period, right? We'll have a look at that period over there. You can see that the green cycle, which was 2021, you went into this consolidation and corrective phase before marking up again, right? 2017 went into a pretty aggressive move towards the upside. And if you look over here, the reason that's important is because right now we're currently below the top side of the trading range, and we did activate that short trade, which is a hedge, which yes, means we could be on this trade potential liquidity for the short squeeze. That's a possibility. But if you're smart about things, you shouldn't have to lose any money. You can just eliminate the risk, right? Because trade is already in profit over there. And what are you getting? You're getting compression of that 9 and 18 exponential moving average, which means that very, very, very soon we should either see the short squeeze take place or we should see an aggressive markdown phase over here as the 9 crosses below the 18, confirming that this is probably a deviation and a trending move towards the downside, or a possibility, the start of a downtrend over the next couple of weeks, right? So either short squeeze comes very, very soon, or we're going to get a deeper correction. We at a major inflection point within the market. You can see all of these spikes up have been rejected, but the picture is a little bit different on Bitcoin versus Ethereum. And we'll show you why in a moment, right? Let's go straight to that, actually. Why is it a little bit different? Because you have this bullish pennant, big move up, consolidating into the apex of the triangle. And according to this, the most likely direction for this to break is in alignment with wherever the trend is. And the trend over there is in that direction, right? You've had this big move towards the upside, you're consolidating, and therefore it's most likely to break towards the upside. And therefore, you need to pick your poison. You need to pick which one you want to go with. I think right now, ETH looks like still a really, really good bet. And if you do get the confirmed deviation, this is the reason you want to pay so much attention, is based on what I just showed you over here. If we're going to play out more similarly to 2021, you could be going through this quiet period, right? A muted period is the wording that's used specifically in this tweet from Runner XBT. Almost every single summer, which is marked between June and September. Where are we now? We're in June, right? Remember, in June, US markets oftentimes go through a muted period because it's their summer break. A lot of the funds close off, they close shop temporarily, they go into their summer holidays, they're not paying too much attention to the market, they might close positions, and therefore you go through the summer lull period. Will this year be different? That is the question. Here's your previous times over here. June to September 2017, we chopped about. Although this was in a bear market, so I think that you do need to consider where you were at within a particular market cycle. You had it in 2019. Theoretically, that was already the start of the bull market, but you did still nevertheless chop about, and then you led into the COVID lows over there. Same thing over here, June to August 2020, but that was at the start of the bull run, which is not where I'd consider we at cyclically right now. You still chopped about with slightly higher highs and high lows, and then you started to go exponential. Many people think that we're still about to see this, right? I am not so convinced that we're going to see something like this, but if we do see it, I will gladly welcome it. It will definitely line my pockets beautifully, but I'm not betting on that, right? I would say that the reality is that we're probably more similar to what we saw over here in 2021, with one more final run up towards the upside, if we're even lucky enough to get that. So why is it important? Because if you focus on this as range highs, if you confirm that deviation, you could be in for a couple of months of chop consolidation, right, before lining up for the next move, which should send price higher one more time to reach those targets that we've had for a long time between $125,000 and $135,000. That is one of the key areas of interest. So pay attention to the 9 and 18 exponential moving average. As long as you're below those, you want to maintain a cautiously bullish approach if you're still long in the market. If you start to reclaim some of those EMAs over there, and most specifically you get above $107,000, that will get your RSI running back towards the upside. The RSI is an interesting thing to study because we've looked at the RSI a whole lot. We know that the RSI in some of the high time frames, and I'll probably have to just quickly find this chart to bring it in view for you. We know the RSI in the high time frames is struggling, right? If you look over here, there it is. You got the RSI, which is rejecting off of the orange trend line. The main trend line is the white one coming in at about 72. And if you do hit that trend line with price pushing up to the target levels of about 125 to 130, that's going to create that triple bearish divergence. And that's what your 1.618 fib extension, which means that you want to be really, really careful when it comes to your trades. You don't want to ape into every single position, right? Pick your battles really, really carefully over there. So when we look at the daily RSI, what's interesting and useful about this is a lot of the time we see this 50 level being significant. 50 level, where you talk about the 50% level when it comes to fib retracements and extensions, often the significance of that as a discount zone or premium zone, and being that line in the sand to differentiate who's in control, bulls or bears. So on the daily time frame, if you can see bulls defending this 50 over here with the RSI, that's pretty useful, because that tells you that you probably will bounce up over here, reclaim some of those key moving averages, which we have on this chart over here, the 9 and the 18, create the short squeeze. If you create the short squeeze, of course, the RSI is going to break this, and that could start to rapidly accelerate the RSI towards, of course, the 72 to 73 level, which is where you expect the triple bearish divergence to play out, with price running out of steam at about $125,000 to $130,000. So all in all, that's more or less what I'm looking at. Now, many new people will probably be commenting right now. I should look in the comments. Let's see if we can find any of those. So it's up, down, or sideways. Genius. Let's see. See if you can find one of those. There's always, here we go one. Straight away, we got one. Up, down, sideways. More up, down, sideways. 100%. That is trading. Welcome to the arena. That is exactly the way that it works. 100%. It's up, down, or sideways, right? There's your scenarios. Those are the ways that you're going to look at it. Basically, I will try and make it a little bit more simple. If you can start to reclaim back above $107,000, probably you're going up, a major lows in, short squeeze takes place, expansion towards the upside, right? If you can't reclaim that level, then your answer is possible sideways and consolidation, forming a trading range most likely between about $100,000 and about $107,000. That chop could lead to the breakdown in Bitcoin dominance, which is over here, right? You can see the Bitcoin dominance slowly beginning to potentially roll over. It's too soon to say we really need to take out that low. Sideways Bitcoin most likely leads to that. If you look at the downside risk, well, ultimately, if you sweep below $100,000, you got major support at 98. That will lead to an interim bounce. If that interim bounce leads into a lower high, so something like this, into a lower high, then you may fulfill this trade all the way towards the downside, which means what? It means that you're probably playing out exactly what's been highlighted over here, the muted summer months, right? So these are the various different scenarios. Anytime you're at an inflection point within the market, there is going to be an up, down, sideways sort of scenario. And you're looking for the trigger plan. That's what you want. You want the trigger plan. As soon as the market gives you confirmation, then you can say with much more confidence, okay, now it's just up or it's just down, right? But it takes a bit of time to get to that point. So in terms of liquidity, let's quickly have a look at the various different time frames. You see for Bitcoin, you got liquidity in the short term, $26 million worth at just above 107,000, which is what I just said. If you get above that 107,000 and specifically you can close a high time frame candle there, chances are you're going to accelerate towards the upside. If we look on some of the high time frames like the weekly though, I believe that there's much more liquidity on the downside. You can see about $40 million, $50 million worth of liquidity on the downside. So it's up to the market makers to determine which direction they're going to send this. I must say, TA-wise, I would much rather see a sweep of the lows. I'd love to see ETH go down to about 2,200. I'd love to see Bitcoin sweep 103,000, not because I want James Nguyen to get liquidated with his now liquidation has been risen. Why is his liquidation rising? Because he has to pay something called funding. Funding is eating out of his initial equity where he's paid almost $50,000 in funding. And so the liquidation level will rise higher and higher and higher, right? So he's about $1 million in the red again. And we don't wish him ill. If James is watching this, we do not wish you ill. I'm rooting for you to win, but I must say you're probably going to get liquidated. Okay, let's continue. So with that being said, let's go on to ETH. We've covered ETH in terms of the ETH BTC chart. If the market consolidates for Bitcoin, ETH probably breaks out with Bitcoin dominance coming towards the downside, ETH BTC, right? Which is going to be good for the market. I'm keeping a super close eye out on the USDT dominance, which we're also trying, similar to Bitcoin, to determine the deviation and if this is in fact a true deviation. And we haven't had a full proper test into this level. So if we do get a test into this level one more time with those lower high structures forming, that could be enough to drop price down to liquidate. What's his name again? Is it James Nguyen? James Nguyen, I think is what his name is, right? That might be enough to drop price down to about this $104,000 region. Find a little bit of support there. ETH comes down into the key levels that we're watching, which means a sweep of those lows. That would look something like this. That becomes a wonderful, wonderful buying opportunity. Remember, I'm not a fortune teller. If I had a crystal ball, I 100% wouldn't be doing these shows and sharing any of that with you. I'd be greedy and taking it all for myself. And therefore, I don't know if this is going to go up or down first. But we've been long on ETH for a long time. We've been long on ETH firstly since this 1,500. We went long on ETH again at 1,800. And we've caught the bulk of this move. All I'm saying is if you didn't listen during those times and you missed all of that, you probably want to wait for something like this and hopefully you get it. I can't guarantee if you're going to get it. If you did listen and you took those positions and you're holding the spot alongside me, what should you do? The answer is nothing. Just hold the position. It's more risky for you to get greedy over here and say, you know what, I'm going to take all my profit on the ETH trade that I took from the lows because I'm hoping to double down if it goes here. Don't do that. Because it could very easily do this and then flip that into support and then continue to 4K quicker than you can believe, right? So I think that your best approach, if you took the ETH trade with me the first or the second time and you're still holding that, is just hold it. That is it. Just hold it. It's better for you to rather go for the full retrace than risk trying to sell it to buy it here and then this happens and now you're left behind. This is one of the biggest mistakes that traders make when they're new in their first crypto cycle and you're moving into a runaway bull market, which I'm not saying necessarily that we're doing that, but if we do that, the biggest mistake is they try and sell at the local high because they want to buy back lower, and then the dips become more and more shallow and the pumps become more and more aggressive and you basically miss everything. So if we look at ETH over here, look, it's got a tight trading range, and that's why I say, truthfully, it's very, very difficult to determine which way ETH is going to break up or down first. I honestly don't know. The pressure is grinding towards resistance right now. The closer you grind towards resistance and the more you do that, the higher the chances are that this thing's just going to break towards the upside, which means you're going to take that upside liquidity first. So upside liquidity is, very, very significant. This is huge. I don't even know if this data is correct because when you're comparing this to Bitcoin, it's truly unbelievable. Like we can actually put these next to each other. Here's Bitcoin. Okay, let's go to Bitcoin on the weekly, right? What is Bitcoin's liquidations? You'll liquidate $61.5 million worth of leverage if you come towards the downside. What is ETH's liquidations? 1.69 billion. Is this true? That's the question. Is this true? Maybe we need to re-verify this. I'll get the whale room team to get onto this to double check the data. And on the upside, you got 1.77 billion worth of shorts to be liquidated. It just sounds a little bit high. I don't know if this is true, if we can trust that data. We'll look into it. So we spoke about the ascending triangle. This is what I'm talking about. If ETH continues to grind into those highs, you got test 1, test 2, test 3, and then you'll be working on your 4th test, which is almost inevitably going to break out. So what do you do if you have no positioning on ETH? That's probably the other question, because most people don't listen the first time. So I'm assuming most of you don't have any exposure to ETH whatsoever, when it's probably going to be one of the best performers in terms of breaking out. So what I'd be looking at is this, right? Again, either you get lucky enough for the sweep down, you buy, right? If you sweep that low and you deviate, you buy hard over there, and you're looking for the next move up, immediate reclaim. Alternatively, you wait for the move up and high time frame closes above these highs, which would be here. If you get the high time frame closes above the highs at 2,700, you're going to very quickly expand towards 3,300, which was the yearly open. That's been our target for a long time, which gives you a pretty good move. We'll find a closer entry for you when that happens. Over here, this is no man's land. You can't really do too much unless you've already been positioned. You can't buy here in the middle of no man's land. Just leave it. Okay, cool. All right. Let's see in the comment section what you guys are looking at. Okay, let me know in the comment section, guys, if there's anything in particular that you want to have a look at. Look at even the difference now between BTC and ETH. Down 0.04%, ETH up 1.48%. What do you think that means if the market actually breaks towards the upside? ETH is going to outperform, of course. Okay, ETH is going to outperform. So there's the target, is the yearly open. All right, we'll take a couple of altcoin requests. I do want to let you know you can actually get some free ETH. How much free ETH can you get? I believe it's about $300 worth of free ETH in a trade. How do you do it? Use the link in the description below here. Go through to Blowfin. Click that link. Sign up. This is, of course, only for new people who don't have a Blowfin account. But if you don't have a Blowfin account, there's no KYC required. No VPN that you need to turn on. So this is probably the best non-KYC exchange in the world. And once you sign up using that particular link, it says here, register, you'll receive a USDT voucher, which I'll send through to your account. And you can open up a leverage trade on 20x leverage, basically Scots-free. You can't lose any of your own original equity. And basically, I'll just go long on ETH. That's it. There we go. It's going to be denominated in ETH. Okay, we'll go through a couple of altcoin requests. Also, if you want to learn more about trading and analysis, please do join Whale School. We've got 12 days left to go. Your last chance to make life-changing gains, right? From the final altcoin season ever. Is that true? I don't know if it's the last one ever, but if we do get the breakdown in Bitcoin dominance, the gains come very, very quickly. So I just want to help you guys to get prepared in Whale School. If you sign up to Blowfin, that user ID will be your entry ticket anyway. Therefore, you don't have to pay the $2,000 fee. Alrighty, let's go through a couple of altcoin requests. We'll look at a few extra things. I know there's a lot of requests over here for 𝗶𝗴, for example, because we know if ETH does well, we look to the higher beta plays. So therefore, we do have to look at 𝗶𝗴. So let's see quickly what 𝗶𝗴 is doing over here. Okay, it looks really, really good. Initially, we gave the long trade over there. It came back down into support. So theoretically, this is still very, very, very valid. Stops below those lows. You don't want to go take out those lows. I think this is a super solid zone. And if we go through to total 3, well, this is what I'm talking about, right? Total 3 versus others. This is your bid zone. Into that gap is your bid zone. Others, into that gap is your bid zone. Let's go through to 𝗶𝗴 over there. Into the gap, same thing. Yellow zone over here. That's your bid zone. If ETH does break down and sweep the lows, though, you would want to stop out very, very quickly on this trade, because then it's probably coming all the way down to 891, which is all the way at the bottom of this expansive move. So as a percentage, this is what you're looking at, 27%. So this is your optionality, right? If you want to, amplify your gains, a lot of people use leverage in the wrong way to amplify their gains. They use the leverage slider to trade as if they had more money, right? But they're taking on way more risk than they can afford to do. But that, if on something like ETH or BTC, is the only way that you can get let's say 3, 4, 500% gains within the cycle. Or alternatively, you could go in spot, which means you have no chance of liquidation, and just long something like 𝗶𝗴, which is going to move at 2 to 3 times quicker than ETH. But understand, it also comes with increased risk that if this turns around, you can wipe out 50% of your account quick sticks. Okay, MOG is another question mark over there. Let's have a look at MOG. Where's MOG? I know we have MOG on this list. Probably just easier to search it over there. So MOG, how is MOG looking? We haven't looked at this one for a very long time. Okay, MOG. So similar to 𝗶𝗴, as well as the rest of the coins. Here's your area of demand. Let's quickly view this on the weekly time frame. So, true demand, true discount zone is going to be into this area, but no guarantee that you're going to get that move all the way down. So this is your area of interest. Let's just change the color over there. Where is our, there we go. Okay, so this is going to be a pretty key area. Let's just have a look at it on the 3-day time frame. We can tighten this up a little bit. Daily time frame. Look, I think that it's probably worthwhile having put in a bit over here. Anyone that got those lows over there, you would want to see this start to move. But don't be surprised if it does come down one more time. That's going to be completely dependent on if BTC sweeps $100,000 and ETH sweeps down into 2,200. If they don't and they go from here, then theoretically, that's where your stops are going to be below those lows, and you're looking at massive expansion towards 26,500 are the last digits. If ETH and BTC reject and go down one more time, you could do something like this, right? And then, which means basically you need to scale into the position. So you could take maybe 1/3 size over here, leave 2/3 for in case price comes down a little bit lower. Alrighty. What else? Jasmy. We also haven't looked at Jasmy for quite a while. Jasmy USDT. Let's have a look. How's this one doing? Alrighty. Okay, this one's starting to roll over, so it's giving up a lot of those gains. You can see the structure is beginning to shift. I don't think it looks great, if I'm honest with you. I think that, this can easily come all the way back down, which you need to be aware of, right? This can come all the way back down into this key level. Okay, so down towards this wick low, probably 1323. 1323. Okay, SPX 6900. Sure, we'll have a look at that. SPX 6900. We don't have the full chart history, but we'll work with what we have. We spoke about this one as looking like really good in the sense that it's putting in higher highs and high lows. You can see it had this ascending triangle. Look at that. Backtest perfectly into that. So this is kind of what you'd be looking at, for example, on ETH. ETH is in this ascending triangle, and this is what I'm talking about. If ETH confirms a candle close out there, it's probably going to expand. You're lucky if you get a perfect backtest into the top of the ascending triangle, and then you got continued expansion. But the thing is, now it's coming into a pretty significant level. Personally, I definitely wouldn't be long at this zone. This is going to be major resistance over there, exactly where that prior top came in. And you can also use your fibs. Let's just line that up and see from a fib perspective where this lines up. Okay, exactly into the golden pocket. Now, I do think it, as long as it can consolidate between $1 and 120, so within this range, maybe you put in a short-term rejection and then just chop about over here. It will probably trend higher and above this. But yeah, I wouldn't be longing into resistance. That's all I'm saying. Okay. Glue. Sure, we'll have a look at Glue. I don't know if I've ever heard of Glue. But anyways, let's have a look. Glue. I don't see what will go Glue USD. Is that correct? Am I reading this correct? Glue USDT. I don't see Glue. Am I missing it? No, I'm not missing anything over here. Let's see Glue. I don't see it. It's not coming up. Maybe it's too low cap. I'll have to look on another chart. If you remind me tomorrow, hopefully I'll find it later today. Glue Hub. Okay, I'll try one more time. Glue Hub. Let's just go over here. Let's just quickly go over here. Glue Hub. Glue Hub. Okay, let's just check it on here because I don't know, it's not coming up on trade. You see, preview only. I don't know, there's nothing there. Okay, Curve. Let's go to Curve. How is Curve looking? I also want to look at ENA. Let's go to Curve first and then remind me. ENA. ENA is the next one. Alrighty, let's quickly get a bit of a high time frame overview on the weekly. All right. So for now, yeah, it's chopping about. Curve, I know, does all the lending. I've seen that their numbers have picked up significantly recently. That's going to be the key range low that I'd be focusing on. And this has to get a range breakout. So remember what I showed you with the trending charts, with these ones over here. These are still in strong downtrends. And the USD pairs are attempting to form a bit of an uptrend. So I don't think that there's any rush. And that's supported with this. Why there's no rush? Because you want to catch trending moves. So if you want to catch a trending move, this is simply just ranging, right? So you can buy the range low and you can trade it towards the range high. But until such time as this breaks out and holds, that would be the start of the trending move. Then you expect that these charts begin to establish strong uptrends above the 3, the 9, and the 30 moving average, and you're going to get a sizable move. Because you have to be careful. These things can range for very, very, very long. This does look like the deviation below the range low, which you go through, that accumulation or reaccumulation, manipulation phase below, and then you start your expansion phase. That would be wonderful to see, but you need to see the others chart and total 3 establish strong uptrends. Okay, and then we said, let's look at ENA, because we know that if ETH does well, ENA could also be one to look at. So let's just double check what the ENA chart looks like. I also haven't brought this up for super long. Okay, we don't have that much history over here on this chart, but let's anyway work with what we have. Let's go into maybe the daily just for a bit more candles. Okay, so pretty key as well. Key range low, I guess similar to curve in that sense. Key range low, you deviated that part over there, ran all the way to the top side. Will you get one more deviation down? I think that depends. If you can't get back above this order block that led to the breakdown, just be careful of a bearish retest into that on ENA. If ENA does reject over there and you get some sort of a slam down and you deviate one more time below those lows, this is liquidity, right, for the taking. That would be dropping it below 26 cents. 26 cents and reclaim, which might be ETH down to 2.2. If ETH comes down to 2,200 and ENA comes down below 26 cents, that could be a higher beta play opportunity if you actually think that ETH is going to do well. Alternatively, you can also wait to gain a bit of momentum if this starts to break. If you want to go with your conservative trend line, that means you must reclaim the breakdown level anyway. Therefore, you're looking at something like this, a little bit of a throwback into there, and that could be the start of a strong move towards the upside. So that is for ENA. All right, we'll leave that on the chart. So we'll leave the options. The options is that, or the option is that. Okay, so which one are you going to get? I don't know. We'll leave that for the future. We'll bring it up again. Okay. How's Sui looking? So Sui is kind of rolling over. This is what I would expect. If ETH were to go down to 2,200, this is how you'd expect it to take place. So it makes total sense to stop out of those trades because the risk always is if Sui does roll over, there's a real possibility this thing could do a full retrace because a lot of quick money made, which means these people are willing to bail out of their positions very quickly. They don't want to realize any losses. And anyone in profit would want to save those profits. So we'll have a look at Brett as well. Brett's probably going to trade very similar to Pepe. Brett USDT. How do we not have this in already? All right, we do. Just got to move it. Okay, it is there. There we go. We're on the right one. Perfect. So last time we looked at Brett over here, we were talking about if it does expand, you're looking at high prices towards, of course, 0.091. And then after that, 13. We probably have to clean this chart up a little bit. So let's just quickly do that. Let's just clean some of these things out. Okay, we broke that. We broke that. All right, let's go with some more clean levels. Okay, pretty clean level over here. Deviated, big level to reclaim. But it is finding support over here. I mean, if this is a risky long, but theoretically, if you are viewing this as major support within the zone, you could theoretically view this as support and mid-range. You can see range low. We'll quickly highlight it for you. So you got your range high. You come down to the lows. And you got your range low. Where is our 50% level over there? There it is, right? 50% level. You're holding that level as long as you can hold that. But it's heavy. It's heavy. It's got a lot of work to do. It needs to reclaim this. You're kind of longing in the middle of nowhere. The only thing you have working for you is those wicks. So I would say this is just chopping about. I would rather let it chop about and either move up, start to long on the breakout, or long if it comes back down towards the lows, which would be ETH down to 2.2. Okay. Alrighty. Sure, we'll have a look at WIF. Let's also look at Fartcoin quickly. Fartcoin, I also worry, is starting to roll over here, which means that Fartcoin could easily move back down into the key support, 78 cents. WIF. Kind of similar to Brett. Also just chopping about in the middle of nowhere. I would definitely want to see a bit more structure forming over here. Yes, you do have a little bit of an uptrend that's forming. Yeah, it needs to get moving very, very soon, which is in alignment with what we've seen over here on both others and Total 3. Needs to start to move out of here. So most of these, I think, are good for a short-term move because you can look at Total 3 or others for you as your proxy. Most of these are going to be good for a short-term move towards that order block, which as a percentage, what does that look like? Let's just quickly double check. So as a percentage, that's about a 4% move. On others, as a percentage, that's about 5 or 6% move. If we look at WIF, back to the order block over there, that is approximately also a 16% move, right? Let's just double check that. So from here to the breakdown level, 15, 16% move. So depending on which coin you're looking at, there's upside moves into those zones. And then you need to assess, is that a lower high? Is it rejecting from the order block? Is it a bearish retest of that order block and it's going to turn back down? Or does it smash right through? I think a lot of it is going to depend on what happens with the stock market. So right now, it does look to me like the stock market is going to squeeze through into these new highs. And then I just wonder what these guys are going to do. Alrighty. Cool, guys. Yeah, if you want to claim your, of course, your free ETH, use that link in the description below. They're going to deposit it into your futures account within 3 hours. You'll get a voucher. It is linked below. Also, you can use that user ID to get into whale school. And then for the whale members, yeah, we'll be keeping an eye on all of the trades as well as what James Wynn is doing. We'll see. I think until he gets liquidated, there is still risk of one more downside flush, unfortunately for him. Not because it's him, just because I think the market makers want the liquidity. So that's it from me. I'll see you all on the next one. I hope you have a lovely, lovely day, and cheers for now.